Hello, everyone. Thank you for being here and for creating this company that helps a lot of our startups accept payments online. In the first part, I'd like to go through what GoCardless is and why it's so great for companies, and then talk about your story and how you got there. So just to give us a sense, how big is GoCardless and what do you do for companies?
Hi, so I'm Hiroki. I'm the CEO and co-founder of GoCardless. So I'll just give maybe the 30-second pitch, and then we can go on to how we help companies. So what we do at GoCardless is we make it really easy for businesses to accept recurring payments, and we do that by building technology on top of bank-to-bank payment systems like Direct Debit, or in France it would be SEPA. And the reason we do this is because when we were first starting out, we were trying to get access to payments for a different idea that we were working on. And we found it really, really hard. Like we saw that there was these credit and debit card networks that were the predominant way for people to take payments online. And they just didn't work for what we were trying to do. And then there was these like bank-to-bank payment systems that were really hard to access, really clunky. And we thought, okay, well, if we can get access to that, that would be really great. And in going through that process, realized there was just a much bigger problem. So we've been going for about, 6 years now. We started in the beginning of 2011, and we now work with over 20,000 businesses each month, helping them to collect around 1.5 billion euros each year. So yeah, we've grown pretty quickly. We started in the UK. Spent a bunch of time in San Francisco doing Y Combinator, came back, and then have been pretty focused in the UK for the first few years, but now have started on our international expansion. France was our first market, so this is a place that is really important to us, and we're seeing some really great growth across our European markets now. So it's an exciting time to be part of the journey, but not a good time for Brexit.
So you're only focused on Europe. So why did you go to YC in the US?
So I guess when we first got onto Y Combinator, we were working on something slightly different. The first idea that we were working on was to help groups to collect money. So if I'm going on holiday with my friends, or I'm captain of my local sports team, or something like that, and so that wasn't really a European idea. That was just an idea that we had, and we just so happened to be based in the UK. But when we got to Y Combinator, as the idea evolved, we realized that this whole idea of creating a bank-to-bank payment network would really only be able to be started in Europe. Like in the US, people are much more wedded to their credit cards and their debit cards. They love their loyalty points. Just as a way of paying is very foreign to them. Whereas in Europe, people are much more used to paying with their bank account. And so we felt like if this change was going to happen, it was going to happen in Europe. But I'm still glad that we went over to San Francisco, because at the time, the UK and Europe in general was a difficult place to start a business. I mean, I think one of the first things that I read on the family's website is about toxicity, and that's something that really hits home for me as well. And when we first started in London, most of our friends thought we were just unemployed and dossing around. And so going to San Francisco and learning from some amazing people over there was a really great experience, and shaped a lot of what we the way that we wanted to start the business.
And so you started with one of your McKinsey colleagues. You already had the idea during McKinsey, and then you flew there and you pivoted with a team of two, or were you already a lot more?
No, so the story for us is starts with Matt and I at McKinsey, and so Matt's my co-founder, and we played with loads of ideas when we were at McKinsey. We would sort of spending every week discussing a new idea, and actually we only came up with the idea of group payments after we left McKinsey. So it wasn't like we left to start this company, and then fairly early on we met Tom, who was our third co-founder, who I knew through friends at university, and he joined us. So it was three of us as co-founders, and then at the time of the pivot, which we did like halfway through Y Combinator, we also had our first employee, Harry. So there was four of us at the time.
So it's still reasonable enough to pivot and,
yeah.
and make it happen. And then you went back to Europe. Can you tell us what big difference you felt in terms of toxicity? What are the big barriers that you had to face?
So I think that one of the big ones for me was investment, right? So when we were doing demo day and talking to investors in San Francisco, I mean, it was incredible, the number of people that were there and just like the depth of expertise, the variance in terms of like strategies, and it was just, you could talk to hundreds of investors. But other thing that we learned was that actually what you really do want your investor to be local. Like if I think about where our investors have added value, it's all been from, chance conversations or interactions in person that would be very difficult with an investor that was based in Silicon Valley, and that's something that the investors were telling us from like in San Francisco. A lot of them were like, look, we don't really like to invest outside of the Valley because we're not actually there. And when we came back to London, when we were talking, there was just much fewer people to raise money from. So that was probably the biggest challenge, was the lack of investment, and that's actually changed a lot, I think. But that's probably the biggest one.
It has. It is something we also tell our entrepreneurs. It's not that American VCs don't like European companies. It's just that they're not able to bring value, and they don't want to adapt to a local legal framework.
I mean, I think it's less of a legal framework. I mean, we were a US top company. It would have been very easy from a legal perspective. It is more just like, it's much more difficult to build the relationship and actually add value from an investor's perspective, I think, and also much harder from a founder's perspective to get value from an investor if they're not local to where you are, or at least like in close proximity.
Yeah, so you mean Paris is the same like London?
Yeah, exactly. I mean, like I think that it's easy enough for a London-based investor to invest in a Paris-based company. We're 2 hours away on the Eurostar, and Chris will kill me if I said that they can't. But if you're raising money from a Silicon Valley VC, I mean, the time difference alone means that you've got only a few hours of the day that you can even talk. So I think that the ability to really build relationships is much harder.
And then how long did it take to close the first deals with the banks? So it seems pretty difficult to go and talk with them. How long did it take you to have the first product running?
It was pretty frustrating actually. But in many ways, that whole experience is what shaped the idea of GoCardless and gave us the inspiration for what we're doing now. So it's kind of a blessing and a curse. But we started in January of 2011, working on this like group payments idea. We didn't want to wait to get access to payment systems, so we just built a prototype on top of PayPal. So the first version was actually built on top of my PayPal account, like my personal account. So that got shut down pretty quickly. But we got going pretty quickly. We weren't actually touching any money. We were just sort of seeing how people thought about payments. And so we were able to get a first product to market without actually getting any kind of banking deal. And I think that was really important because a lot of what we learned in that shaped a lot of how GoCardless works today. In terms of actually being able to process our own payments, that like from day one of like trying to create this group payments product, we knew that was what we wanted to do. And so we started talking to banks pretty early on, and it took probably about 6 months to get a provisional kind of like, yes, maybe we'll consider working with you kind of arrangement. And like, let's be clear, this was an arrangement that was like dependent on regulatory approvals, dependent on a certain amount of investment. There was a lot of like strings attached to it. But what we found was that all of these things built on top of each other. So being able to have the banking partner helped us to get the investment. It helped us with the regulatory approvals, and vice versa. So I'd say it was 6 months, which sounds like a short amount of time, but when you're first starting a business, the first 6 months or the first year feels like about as long as the next like 3 years in many ways. And 6 months felt like a really long time back then, and we had to go through a lot of no's, a lot of persistence to actually get to the right people within the banks to actually make that happen.
So you did that in parallel of the regulation you had to file in the UK.
Yeah.
And then all this regulation being done in the UK, could you passport it to the rest of Europe? How did you choose the countries you wanted to go to?
Yeah, so actually I think that regulation is something that has never really been a big barrier for us. We were able to, the regulation took time. I think that was, again, something like a 6-month process to get the regulation we needed. But that wasn't difficult, and even once we got it, being able to passport it around Europe, that was quite easy as well. And so, we've been quite lucky in terms of regulation that there's pretty well-defined regulation in Europe that helps us to do what we do. That's actually quite different from the US, for example, where in the US the regulation around payments is totally backwards and really, really messed up, and actually starting a company there is much harder. So we were quite lucky, and the regulation was never really a big deal.
So in the US, you would have to file in the 51 states.
Yeah, I mean, it depends on who you talk to, basically. There's some people will say you don't, some people will say you do. You can be an agent. But no one really knows. It's the honest answer.
And the Brexit would change anything for you?
Yeah, I think it definitely will. I think that actually no one really knows what's going to happen in terms of the regulation and the actual legal side of things. We don't even have a leader in the UK anymore, so no one knows what's going on at all. But what I do know is that it's created a lot more uncertainty, and that makes our potential customers less comfortable, right? So what we'll be doing is actually facing towards Europe more in order to actually go above and beyond whatever's required. So, I know we'll be looking at beefing up our operations over in Europe. I'm not sure which country yet, but, getting additional licenses that we don't necessarily need, getting additional banking partners. All of this is more to put us in a great position to serve our European customers and give them the comfort that they're looking for. So, the shame of it is that a lot of that work will be stuff that doesn't actually fundamentally improve the product. It's a distraction, and that is a really quite costly. Any time and attention that you're spending not working on your customers or growing is kind of wasted effort in many ways. So that'll be a shame. And what I worry about is, we're luckily enough a company that's big enough to be able to handle that. If you're a smaller company, then that all of a sudden becomes much less viable, and so I worry a little bit about London as an ecosystem, but it's a good opportunity for Paris. So
Yeah, we hope so, but no one actually knows what's going to happen. So I agree with you. It's going to be uncertainty, and you're lucky enough to have a company that have enough revenue to distract itself a little bit.
Yeah, exactly.
Where did you learn this notion of focus that we try to teach everyone here? Where did you feel the sense of it?
I'd say really, I actually think that the experience of Y Combinator was pretty formative for us. A lot of the mantras that come out of YC seem quite trite. It's make things customers want. It seems really obvious, right? And one of the things I really noticed on going through that program was that they would so you'd have these things called office hours where you'd talk to a partner there, and you'd meet them maybe once a week, and you talk about whatever your biggest problems were, and they'd actually come back to you with answers that felt quite generic, but on reflection you'd then be oh crap, that's what they meant, right? And that's definitely one of the big ones that YC are sort of championing, which is focus just on really what matters. Don't go around talking to lots of mentors. Don't go and do anything other than speak to customers and build product. That if you're doing anything other than that, you're wasting your time. And so that was kind of drilled into us very early on. And obviously as you scale, what focus means changes, but it's something that goes through your DNA after a while.
Yeah, that's what we hope. So we try to see Europe as one continent and one place to build companies. You started in London. when did you start to choose to go abroad, and how do you choose the countries where you go to?
Yeah, that's a good question. So, I mean, we knew from day one that what we wanted to build was not like a UK-based company. In order to make what we're really interested in making, it has to be global. And so that it was never really a question of like, would we go into a new market? So it was more like when. And in many ways, like, it comes back to that question of focus, right? We could have tried to go into Europe much earlier, but at the time we were still focused on figuring out who our customers in the UK were and how to effectively, target them and grow. So I think that going into new markets would have been a distraction. Now, at some point, you kind of have to make that leap, and I'm not sure there's a perfect answer for like when is the right time. I actually was listening fairly recently to a Jason Lemkin post about being really focused up until the first 10 million of ARR, and we certainly went international before that, and you could argue for and against whether that was a good thing, but I definitely think that you have to just be like really clear that you're confident enough in your core business to be able to go into the new markets. So that's kind of when we wanted to go into new markets. In terms of like which markets we went into, we've taken an approach of saying, okay, well, let's do some research up front, but it's difficult to do perfect research, right? Like, if there's anything I've learned from starting a business is that you don't really know until you start doing. So what the approach we've taken is to be more placing kind of small bets on new markets and seeing how they go, and then ramping up as they work. So we, about say 9-10 months ago, we said, okay, well, let's try, like we did France first just to see that we could do it. France has gone really well, so we've continued to push, and then we tried 4 more markets, and we kind of knew from day one that not all of those markets were necessarily going to be the ones that we'd see initial growth in. And 2-3 months ago, we made a decision that, okay, of those 4 markets, we're going to really like focus on these 2. And that's not to say that the other 2 aren't really important and like interesting, but going back to that point around focus, you need to kind of pick which ones you're going to really bet on. And then the other thing that we've done is we've taken an approach of saying, starting everything from London. And one of the great things about Europe is that it is viable to fly around or take the Eurostar to get to each market. And so we've focused all of our team in London, traveling to the market very often, and really been opening up local offices until we have a clear model for growth and really understand the market well. So for example, France, like, we're getting to that point now where we're really like thinking, okay, when do we open an office in France and go more local? But if we'd have done it a year ago, it probably would have been too early.
So for now, it's only been operated by London, but in France. You don't have teams here.
Yeah, so we've got Seb, is one of our French team members in the audience there. And Seb's based in London, but, well, I don't know, you probably spend more than half your time in Paris, right? So, but the key is that by being based in London, we're able to cut the cycles in terms of learning. And it's much easier for me or my exec team to engage on something when it's based in one office. And so I think that we were able to learn and respond more quickly than if we had a local office, which, I was visiting once a month, Nicola was visiting once a month, then that really like slows down the rate of learning, I think.
Yeah, that makes sense. So now you're going to focus more on Paris. What I wanted to ask is, I see a lot of distraction for entrepreneurs, and going abroad is one of them you mentioned.
Yep.
And I often see it as a way for a company to be impressive towards investors, saying we're in 2 markets, we're able to do it. And they do it a bit too early in what would have been best, just to be impressive. How do you manage that?
Well, I actually think this is a really important point that's not just about internationalization. It's like this concept of like play acting a startup. And that again is one of the big things at YC that we learned was like, they're very, very strong on like, look, you only do what's actually going to create value. Don't focus on things that look like you're starting a business. So, other things that you can do are employ people, try and raise big amounts of money that you don't need, go to fancy events and, be on talks like this, arguably. But, there's a lot of things that you can do which aren't like building your business or talking to your customers or creating a great product. And I'd argue that, you try and minimize all of those, right? So whenever I catch myself thinking like, oh, how awesome is this? I'm like, okay, is that awesome because of my ego, or is that awesome because that's actually good for the business? And I think you have to be very honest with yourself. It's very easy to fall into that trap.
Yeah. So it's in the beginning we tell everyone to fake it till they make it, and then you need to stop that. Or do you communicate like you do you deliver more that you actually can?
Well, I don't know. I think that like faking it until you make it for me means something slightly different, right? I don't think the way you fake it to make it is to like pretend that you're a big successful company. I think that it's maybe you'll like fake a feature to win a deal that you can build before they need it, or make someone feel like more confident in like what you're able to do than you might feel yourself. But I don't think that applies to like play acting about how successful your startup is. I don't really see any upside to that.
Okay. Now that you're in a couple markets and the team is big enough in London, where do you see GoCardless going in the next 2 years? Is it still focused on delivering the same product and the same experience in many different countries, or do you plan on getting to something else?
No, for me, I want to be pretty focused on the product. So I don't think that and this is actually something that I'm seeing across like all fintech companies really, is like taking a specific niche. So, for us, it's recurring payments. For Funding Circle, it would be B2B loans. For TransferWise, it's FX. And focusing on that one product and then making it more global. So for us, the next couple of years is very focused on getting these new markets that we're working in to bigger scale, building our processing capabilities across more markets. So, we've got more of a global capability, but still in that specific product of making it really easy to accept recurring payments.
And when we talk payments, we always hear about the same companies like the Stripes, PayPal, Apple Pay, etc. Is it something you worry about, or you just don't care what they do?
Well, I think it's easy to like categorize all payments companies as like one thing, because that's easy as a mental model. But what we see is that actually like payments is a very, very complicated industry with a lot of different needs, right? So the kind of thing that a e-commerce website needs is very different from someone that's collecting subscription payments. And so the way we think about it is, okay, well, look, let's just deliver a really great experience for a specific set of customers and a specific type of customer. And that's one where, we don't really worry too much about what the competition is doing, in as much as like, it's all in our hands how great our product is. And as long as we're getting good feedback from customers and are able to win more of them, then there's not that much point in worrying about what all the people around you are doing. And then it just turns out that most of these companies are focused on slightly different areas, right? So even payment companies that look very similar, you speak to the people there, and they don't really come up in each other's deals all that often.
Okay, so yeah, competition is they're also very focused on the experience they want to deliver,
yeah,
and
exactly.
you are focused on yours. And it works, and it's been working great for a lot of companies that we have. It actually solves real problems for some of them. Like they had models that didn't work, and one day they decide to do SEPA and automatic collecting payments, and suddenly the model works because they don't have to go after everyone to pay.
Yeah, so, I mean that's one of the most exciting things for me about what we're doing is we're enabling a lot of businesses to build new business models that didn't exist before and they couldn't do before. So we recently actually just launched a new product with a company called Thomas Cook, which is a really big travel agency in the UK, and now people are able to pay for their holidays on subscription, right? Like that as a concept didn't exist before. And they've had a huge uptake from their customer base of that, and it's been very successful for them, and as a result, us. But being able to enable those kind of like new models is a big part of what gets us going.
So on one side, you enable these new models, and on the other side, you enable any business to integrate these kind of payments with an API to what their product is.
Yeah, exactly. So we find that like it depends on the customer, but customers will use us typically in three ways. They'll use us directly through our dashboard, and that's generally like smaller customers. Then the bigger ones will integrate with our API directly, and that's the ones that are more like tech savvy. They'll have like a specific system that they're trying to integrate with. And then the third is more like our service as a platform where other software companies will integrate with us to enable their customers to do things. So, say like an accounting software package that enables all of its businesses to collect payments for invoices against via GoCardless. But that creates some complexity, right? Because like there's three distinct models and three ways of consuming our products, and it is something that you have to think a lot about. And actually, one thing that I think over the past few months I've been thinking a lot about is it's easy for that product to get more complicated as you scale. And as you start seeing different types of customers, it's really easy to say like, okay, yeah, we can kind of make this deal work by just tweaking these things or letting them use the product in a new way that we'd never really thought of before. And if you let that kind of go unchecked, that can create quite a lot of complexity, which is one of the interesting challenges that we're facing right now as we scale. So
basically, you constantly have to say no to your customers.
I mean, I'm a big believer in saying no. Yeah, for sure. In order to build like really great customer experiences, like you have to be focused on particular types of customers. Otherwise, you're like a poor solution to everyone rather than a great solution to just a few people. So yeah, that does mean saying no, and that can be hard sometimes, right? Like sometimes you'll have a deal where you'll think, okay, this would be really great for our revenue targets, but this isn't where we want to take the product in the longer term, and that's something that you have to be very conscious of.
So before we welcome Chris on stage, can you give us the best piece of advice you got, or one that you wished you had gotten way before?
For me, like the best piece of advice is crystal clear. It's one of the pieces of advice that Sam Altman gave us towards the end of our time at Y Combinator, and he kind of described like startups like riding a wave, and as long as you don't fall off and don't die, then you'll inevitably be successful. And that has definitely rung true for us. I'm not saying that we're successful yet, but there's been so many times where you felt like, oh, it's not going to work. Oh, it'll be easy to give up. Oh, maybe we'll die. And as long as you're just like persistent and like don't give up, it's funny how like something turns, something goes your way, you get a lucky break, and then you live to see another day, and you look back and you're that much more successful than you were 2 months ago or yesterday or even a few hours ago. And that is something that has been, from an emotional perspective, a really important piece of advice for me through this journey.
So you had these really, really odd times where
always
you felt you always feel it's gonna die the next day.
Yeah. It surprises me how you always think that those will go away, but my experience is that they don't. They're just new challenges, new worries, and you always feel like oh God, like this might not work. Yeah. And that's at a personal level. But the thing that I've learned now is to expect that, and actually managing that is quite an important part of growing up as a founder in many ways, I think.
Yeah, it's something we tell every founder, that in the beginning you have problems every day and you might die every day, and then it gets a little more sparse but much more intense and much more scary. And I believe that the ecosystem in Europe is not really ready to accept that. As in the Valley, they're used to lose companies that raise 30 million euros. In France, the ecosystem is nascent. In the UK, it's also the birth of it. and we're not used to that.
Yeah, I mean that is definitely something that I noticed is that people are much more comfortable with failure in San Francisco, in a good way. But I think that's changing. I think that
Hopefully.
no, definitely. Like you were seeing companies that are failing, but then those founders are going on to start new things, and I think that for me that's just a question of time.
Yeah, I agree. Chris, thank you. So I'll let you introduce Notion in a long minute.
Sure, and just a quick point on Hiroki. We actually believe in the surfer, not the wave. So we invest in people like him. Hi guys, my name is Chris Chrysanthu, and obviously we're investors in GoCardless, but we're a B2B focused fund based in London, founded and run effectively by a bunch of ex-entrepreneurs, ex-operators, and we've all been in your shoes. We've all been there. We've done that, fundraised, and got slapped a lot of times as well. And we primarily invest in Series A companies. We do quite a bit of seed deals as well. And Hiroki was a big exception for us, and we can talk about why. But we're about to do our first deal in France, fingers crossed. And you'll be seeing a lot more of us here. And Alex is with Notion as well in the back. He speaks French, which is a good bonus point for us.
So Formula, so you worked at Axel before, and Axel invested. Is that how you two met?
There's actually a long history both with Notion and with obviously I've known about GoCardless from day one. It's one of the early early big brands that established himself in the UK, and we've known about him for a while. I've tracked Hiroki through Excel, obviously, but Notion had a long history of interacting with him over the years. For one reason or another, ended up passing in previous rounds or losing out in previous rounds, and we finally got a chance to invest in his last round.
So you passed, but you still decided to choose to work with them. I see a lot of entrepreneurs that put their ego at the wrong place and say, "Oh, he said no when it was seed. He didn't really believe in the company. I don't want him to invest now." So you had absolutely no problem with that.
No, actually, like that's something that for us has worked really well. We're not like precious about that kind of stuff. So both Boulderton and Notion, we got to know quite early on in our journey, and actually it was a big advantage because when it came to raising each of these rounds, where Boulderton came on board and then Notion came on board at the next one, it almost felt just like a continuation of a relationship as opposed to like, hey, what do you think of this? Like, this is what we do. It was less of a dance and more of a kind of a date. But I think that there's different stages of a company, and like you just have to accept that like some investors that is not the right stage. If you start taking it personally that someone says no to you when they don't invest in you, then you're gonna have a lot of problems as a founder because you get a lot of no's.
How do you manage this relationship on the long term before you invested? Is it like you gave him you gave Notion updates every now and then? You asked for advice. How do you do it? Because a lot of times we tell entrepreneurs that they need to build momentum when they're raising, and that first impression is easier to make than a long-term relationship.
Look, I'll let Hiroki elaborate on that because obviously he's been building relationships with multiple investors. But just to give you an example, when I left Excel, when I was at Notion, I reconnected with him when he was thinking about setting up a new sales model and how to expand his sales team, to talk through how we did it at Amazon and what kind of examples. So just interacting with him and going through his thinking process and seeing how mature he was thinking about it and things like that. So again, it's a relationship you build over the years, and you understand how that person is behaving at different turning points in the business. Is he maturing along with the business? Is he not maturing? So it's a journey, but I don't know if you kept on giving updates to the team, because obviously this was long before I joined Notion. So
yeah, I don't think we ever did it like artificially, right? It wasn't like, oh, I'm going to send my like quarterly update to all the investors that spurned me. The way that I think about it is that a lot of people like think about like getting investment as if like getting the investment is the success part, and it's really like that's the beginning of the relationship, really, right? And that's the beginning of the journey, and the value and that you're going to get from an investor, like yeah, sure, a lot of it's going to be money, but a lot of it's hopefully going to be the relationship that you build and the advice that you get. So, in a way, as a founder, you can kind of think of interacting with investors that you're not working with yet as almost like auditioning them as much as you're, auditioning for investment yourself. And I'm a big believer, even though I'm not an investor, in like the whole like lines not points thing. And I think that investors are really looking to invest in trajectories. And that can be trajectories in terms of like pure numbers, but it can also be like trajectories in terms of, how someone thinks that you're maturing as a founder, or how someone thinks that the business is maturing. And, that kind of nuance is very hard to just get from a snapshot. You only really build that over time. So, I would say that what I found useful was actually like genuinely going to people and saying, hey, look, I'd love your advice on this because I know that this is something you guys have got expertise in. I'm struggling with this problem, and being really honest about it, not trying to like pretend that everything's hunky-dory the whole time, because every investor knows that it's not, and then using that as a great way to build the relationship, build trust, and build the relationship for potential investment.
And I think we're reaching a turning point in Europe where the reciprocal applies as well, meaning it used to be the case where there's really good companies and very, very few investors with money. Now there is a lot more plethora of investors out there, so we have to pitch to the very few really, really good companies as well and convince them that we can add value and they need to come to us. So it's not a one-sided game anymore, unfortunately, finally. So.
VCs are on the sell side now.
Yeah.
And it's a good thing. Meaning you have to compete and you need to give before you get. Okay. So what is it you really look for when you talk to an investor and when you decide to take his investments? You got 4 or 5 different funds. Why did you choose so many, and what is it you really look for?
I think I'm maybe a traditionalist, but for me, it's really like the personal relationships. At the end of the day, like the person that invests in your company is going to be on your board. In many ways, it's like your boss. And so, you need to believe that you're going to really enjoy working with them, and that you're going to get value from that relationship outside of just the cash. And, if it's someone that you feel like you don't want to spend time with, then it's probably not going to be a good person to invest in your company. I'd say that's the number one thing. Then after that, I think it's really about their expertise and what you think they'll be able to bring in terms of perspective to your business. We're quite lucky that we've got some great investors, and each of them has like quite a different approach, different way of thinking and seeing the world, and a different sort of experience they're bringing to the table. And that's really important. So, one of the big reasons I was really keen on getting the guys at Notion on board is because they're like ex-operators, and, they've scaled businesses from where we are today to that next level. And I felt like I could really learn from that operational experience, which we didn't really have on our board until then. So, it's a combination of expertise and then personal relationships.
And as a fund, how are you able to deliver on these expectations?
Look, at the end of the day, as investors, we're there to support entrepreneurs. I've seen a lot of good and bad behavior in my life on the investment side, and what I really respect about Notion, what we do, given that we've been on the other side, effectively we're there for you. If you need any help along the way, more help or less help, we're there for you. And you can't imagine, we have the whole spectrum of entrepreneurs, obviously. And apart from the fact that we provide money, which is the basis of why we're investors, we've set up more recently, actually, something that we call platform. Is not necessarily in the Andreessen Horowitz kind of way, but effectively we have someone on the team that organizes workshops for our portfolio companies whether they're at seed stage or a later stage, to help them along the journey with different functional requirements, whether it's how do you prepare yourself for the next round, how do you build high-performing teams, how do you build a sales and marketing organization. The more recent one we've done, we've actually set up every 2 weeks a call with experts, lawyers, accountants, and other experts about Brexit, which is a recent issue. So our portfolio companies can dial in and ask all the experts to try and give them feedback to try and help them along this journey of uncertainty that we're all going through. So we provide a lot of different functional capabilities like this, but at the end of the day, we're just there for them. So anything they want, like I actually live literally 300 meters away from GoCardless office. He called me a few weeks ago. I just ran up to the office and we sat down and we had a chat. So
yeah, that's just great if it works like this. And how do Notion looks at Europe? So you've been in the UK, investing primarily in the UK. Now you say you're about to close something in France. Do you see Europe as one place, or do you see it as many, like the US?
Yeah, unfortunately, and again, or fortunately, we're in Europe, so it's a collection of countries. I was telling Hiroki earlier, I spend about 50% of my time on a plane on the road, and I have been for the last 12 years. We do see Europe as one place, and each European country has its own expertise, effectively, that has built over the years, whether it's through the local industries that they have, or the ecosystems, or the location, or whatever it might be that might make that country special, or the talent. And each one has its own expertise. So we do look at whether it's like at Excel in the Nordics, we looked at a lot of gaming companies just because they have expertise here. And along with Alex, given a lot of the AI and big data expertise that there is in France, we're spending a lot of time in that sector. Same in the UK. FinTech, obviously, is a lot more prominent in the UK. So over the course of the life of Notion, has been around for about 7 years now, we've started a journey where it was 70+% UK. Last fund was 60-ish UK. This fund is even going to be probably less. So over time, we're building expertise. And again, it's not easy for an international investor to invest in non-core country, meaning where they have people on the ground, just because you don't have that competitive advantage of identifying companies early on. The local investors have the relationships and they'll see them early on. So for example, in non-UK investments, we ideally like to find local co-investors that know the companies, are there on the ground, can help them and provide the day-to-day that we can't as a UK-based fund. So that journey, and obviously as you start investing, like if we invest in 5-6 companies there, then you start building a lot more of a network and relationships, and it becomes easier. But the first couple are always more difficult.
So if you were a French company and you plan to be European or global, you would look for English, German investors and not only French ones?
I don't think it matters where they are. I think it matters of finding the right investors. To Hiroki's point, I think it's all about like this. Every time I talk to a startup, they have a list of all the investors in Europe and that they're ticking the boxes and going down. Oh, I've talked to Axel, I've talked to Balderton, I've talked to Index. I'm like, yeah, why? I mean, find out you're a company that's building a product in ABC sector. Find not the fund, the actual person within that fund that will get it and help you and get excited about it and enable you to go to that next step wherever they are. Obviously, there's dimensions to take into consideration. A lot of funds say they're pan-European, but they have restrictions because of their investors where they can invest. They don't have the scale to help you. There's a lot of different dimensions that you need to take into consideration, but absolutely. I mean, my typical advice to smaller startups is the dream of raising from the US immediately is a great dream, but it's a little bit more of a dream. There's always an exception, but the rule is primarily prove to your international investors and your US investors that you can get buy-in from local guys to help you, and you need them anyway from a day-to-day perspective to be more local. And over time, go raise in the US by all means. All of our portfolio companies end up raising in the US afterwards anyway, so it's fantastic.
If all of them do, it means you've been a really successful fund.
Well, hopefully. not the early ones because they're early, but the majority ones, yeah. Obviously, we're a specialized fund because we only invest in B2B, and the majority of them end up in on the West Coast or New York. So it's a journey to get there.
Yeah, you can't go from the first day. You can't raise if you're set up in Europe, as Hiroki mentioned. Yeah. So yeah, you raise here, you prove you're successful, you maybe relocate to the US, and then you raise there. Yeah, is it something you envision for
they're
GoCardless?
a special company in that sense, but maybe I'll let you elaborate on that.
Yeah, no, I mean, like, I wouldn't rule it out, but I don't see it happening anytime soon. For us, you know, like I said, I think that this innovation that we're working on is always going to come from Europe. So it doesn't really make sense for us to be in the US. Like the US it's funny actually. I was chatting to the guys that started Skype, and that's the only other business I've ever come across where they were global ex-US. And I could see that happening for us. Like we could be global ex-US. So, you know, oh, was that? No, but you guys had US.
BlaBlaCar.
But it was all run out of the UK.
No, but I mean, it's in like the US wasn't even a big market for Skype.
Okay.
Yeah.
Like BlaBlaCar.
Sorry.
BlaBlaCar.
Yeah, well, yeah. There's more coming up now, but you know, and so I think that you know, raising from the US makes sense if you think US is going to be a big market for you. But if you don't, then I don't think it really makes sense. Like there needs to be some kind of local connection to what you're doing and the investor that you're raising from. Otherwise, you kind of have to question why you're raising from them.
I find it really great that first in Europe we have some specificities that make businesses have birth here, like GoCardless, TransferWise, Skype. All these businesses would never exist in the US first day, and that we get great investors finally in Europe that know entrepreneurship.
Yeah, no, I'm really excited about the ecosystem. Like I've been sort of part of it for the last 5 years, 6 years, and you know, watching it from before that, and you know, it's totally unrecognizable from where it was back then. So, you know, I think in the next 5-10 years, it'll be really interesting to see where it goes.
Do the audience have some questions?
Hello. I was wondering, so you propose a payment solution. Today there are many fintech companies proposing payment solution, but most of them are based on credit card, and you are one of the few fintech companies proposing another payment method, which is direct debit. So why do you think there are so few companies proposing this payment method? Why only credit card?
Well, I think that the main reason is because the bank-to-bank payment mechanisms like direct debit don't work very well for a big majority of the market, which is e-commerce. So if you want to, you know, sell something and ship it so that it arrives tomorrow, you need to know that the payments worked immediately, right? And that you can't do with bank-to-bank payment systems at the moment. So that kind of like just takes out a big chunk of the market, and that's where most payment companies are focused. Whereas like where we're focused, which is recurring payments, obviously you can time the transaction, so the timing is much less of an issue, and there's other properties of bank-to-bank payments which are really much better suited to the kind of recurring payments that we focus on. So, you know, I think it's a question of like, it's a less obvious market to go after. The reason why we're excited about it is because I think that if you look at the way that payments work, like it doesn't make that much sense that everything goes through the credit card networks. Like they're very, very complicated systems with lots of third parties in between each transaction. And so we have like this longer term belief that the way that payments on the internet will happen in the long term will be bank to bank, and that's what we really like are excited about in the sort of the longer term horizon. But for now, I think that, you know, people are focused on what works in today rather than what might work tomorrow.
Good evening. My question is very formal. I understand you're working on the SEPA solution. What is your status regarding the PSD1? And do you own a passport to work throughout Europe in that context? What sort of status you have?
Yeah, that's a very specific question. So do you mean PSD1 or PSD2?
I don't know if PSD2 is already in function in England.
No,
it's not in France anyhow.
Yeah, so for us, just for everyone else that doesn't know about payment regulation, PSD is like a European regulation that came in about 2009, so just before we started GoCardless, which enabled there to be like one set of regulation that works across the entirety of Europe. So we're regulated by the FCA in the UK under Payment Services Directive, and that's what enables us to passport our regulation around Europe. Now, obviously, that is under question with the whole Brexit outcome, but that's something that's not going to happen for the next 2 years, right? So legally and sort of from a regulatory point of view, there's nothing's changed and everything. We can still continue to operate in the way that we have. What we will most likely be doing, though, is creating more of an operation in Europe, which actually is regulated independently of our UK operations, so that regardless of what happens to the processing sort of and the regulation across Europe and the UK, will be okay.
But namely, you are a payment operator or electronic money emitter?
We're a payment institution.
Payment institution. Okay,
Yeah.
so that allows you to go throughout Europe now with your passport, your English passport.
Yeah, exactly. Yeah.
Okay, so let's hope the Brexit lets you work.
Either way, we'll be fine because we'll be able to. I'm pretty confident we'll be able to get regulated faster than 2 years. So
Then you get your French branch to get
yeah, exactly.
passport.
Exactly.
Thank you very much.
My question is, what are the hot topics in payment or fintech in general, except for direct debit? What are the hot topics that you think at Notion Capital?
Look, typically we're quite agnostic across all the space. You see all sorts of different pockets happening that for us are not specifically like loans and things like that we don't specifically take a look at, purely because of the business model. For us, is primarily finding markets that either haven't been touched by technology, sort of what GoCardless is doing, or what Currency Cloud is doing for cross-border payments, or Procure to Pay, what TradeShift does. So there's a lot of different old industries that haven't been touched at all, though we typically try and go after and find someone that's approaching it with the same focus on product and customer obsessiveness that GoCardless does. Like, for example, two of the key reasons that, obviously, apart from Hiroki and the culture he's built and the maturity that we've seen him evolve over the years and really, really loved what he was doing, the two core things that we absolutely loved was the fact that they built a super simple product to democratize and open new business across this capability. And the second one was how easy was the product to integrate, how customer obsessive they were in terms of, like, every customer we talked to were shocked at how good of a feedback they gave us, in a sense. So for us, it's all about finding, it's not necessarily the specific things that we're going after and seeing if there's someone doing something that we've identified. Yes, we're looking at insurance, for example. There's a massive, massive market in the UK, and we're proactively trying to find stuff. But when you proactively try and find stuff in something like that, there's not as much that we've been identifying. We were just talking about RegTech, regulatory technologies. A couple of companies, but not as much yet. So it's not about going after a sector, it's about finding those companies that are actually, even if it's an old sector, even if it's something that's happening somehow, they're doing it in a completely disruptive way. So,
a few weeks back, I was looking for a recurring payments solution for my business idea, and I don't exactly remember coming upon GoCardless for some reason. I found obviously Stripe. There is also Chargeify and Recurly, but none seem to really fit my needs. So my question is, in terms of concrete business domains, for what kind of business is GoCardless really an optimal choice? In other words, what are the success stories with GoCardless?
Yeah, so that's a good question. So we work across a lot of different industries. You know, we have over 20,000 customers or like businesses collecting through us each month. So as you can imagine, that spans quite a few different types. But there's a few that kind of spring to mind, which really like stand out. So for us, like we work a lot with like small companies that are collecting subscriptions, often like for the first time. That can be like quite an offline business in many cases. The other one is like around SaaS. So we work with a lot of SaaS companies. Actually, in France, a lot of our early traction has been with SaaS companies. And there it's, you know, where they're collecting payments maybe from other businesses on a recurring basis, and it's like a subscription fee. And then the other area that we see a lot of traction is on businesses that are invoicing their customers on a regular basis. That's another one where, you know, it might be a different amount each month, but they want an automated way of collecting those funds. So that's kind of more on the smaller end. On the larger end, it's generally like mass subscriptions. So, you know, it could be like a newspaper or some like a software company that is collecting from many people, and what they really care about is reducing their failure rates and making sure that like they maximize the lifetime value of their customer, and that's what we're able to help them with a lot.
Right. Thanks. Just a quick follow-up question. One of the reasons why I couldn't find the right fit was that I needed the price of my subscription to be variable based on some simple logic. And I remember looking at Chargeify, and I had to make a fixed number of products or services with a fixed price, and that didn't work for me. I needed to do some logic in real time based on forms and then decide of a monthly price. Is that something that's possible with GoCardless?
Yeah, absolutely. Yeah. So it might make sense for you to talk to Seb at the end of this, and he can help you find out whether it'll be a good fit. But yeah, absolutely. That's one of the big use cases that we have is variable billing.
Thank you very much, Chris and Hiroki, for coming tonight. I hope you guys learned a lot.